Hey traders, welcome to Liberated Trading. Hope you're having a good day. Hope you're having a good week. Today we are diving into a maybe unknown, underrated, and powerful tool that trade traders can use, especially for trading SPX, SPY, or futures. That's the tick index. If you've never used it before, or you're not sure how to apply it to your setups, the video is going to help you maybe see a different way to look at market internals than what you've been using, and possibly give you a little bit edge and avoid the noise that comes with other types of indicators out there. So what is tick? Simply put, tick is the real-time buying or selling pressure across an entire New York Stock Exchange. So where does tick derived from? It's derived from the net number of stocks trading on an uptick minus those on a downtick at any given moment in the New York Stock Exchange. So if more stocks are trading on the uptick than the downtick, tick goes positive. And it becomes a green candlestick or whatever color you're using. If more are on the downtick, it goes negative and it becomes a red candlestick. Typically, I see it ranging from between negative 1,000 and positive 1,000. Every once in a while, you'll get extreme prints outside of those ranges. I will show you an example later. And that really, when it gets to those extreme points, it represents that there's broad market selling and broad market buying, and it's a little heavier than usual. So why does this matter to us as traders? Because I believe that tick gives you somewhat of an insight into the heartbeat of the market sentiment. It's one of the few tools that actually shows you what is happening across all stocks, not just an index that you're looking at or an ETF that you're trading. For example, if SPX is trying to break out and you see tick is deeply negative, most likely it's a fake out. Now on the flip side, if tick is ripping up to extremes around 1,000 and SPX is pushing up, it's most likely showing you that there's real breadth behind the move. This is especially helpful for those trading options and you're looking for the precise entries and fast confirmation. It's also a good way to use for scalping the futures. So how do I personally use it? I gave a couple examples above, as I said before, but number one, it helps me filter out the false breakouts. So if I see a breakout set up on SPX, I check the tick and I make sure tick is confirming with the strength. Let's say it's flat or negative. I'm going to pass on that trade because there's no momentum moving up with it. And how SPX is moving, and most likely you're just seeing that there's just low volume moving up and it's not a strong move. I also use it to time reversals. So when those extreme reading happens during the day and maybe tick has been closer to the 0 line and you get an extreme reading like 1,000 or plus 1,000, it can signal that there's a potential exhaustion in the short term. It's also a great spot to look for mean reversion, especially if it's paired with volume spikes and VWAP. So you don't just trade tick alone. You have to use it as you use it with your strategy and you use it as a tool to give potential entries, see how the market's doing internally. It also helps you stay with the trend. If you see that the market is trending up and the tick keeps printing higher lows and it's staying positive all day, it gives you the green light to stay long. You can use it as a momentum confirmation tool in that case if you see that a trend is forming. You can also use it to find where maybe there's a slight pullback in the trend, and you can use that as another possible placement entry. I mean, you can plot a moving average. I don't do that. I put a 0 line on my tick chart, and I'll show you that. Just because it helps me visualize whether or not we're flat or whether or not we're trending up, trending down. The tick index, it is not just noise. It's smart money in real time. you could say, or it just shows where the money is flowing in the market real time. If you combine it with a VWAP setup, a scalp strategy, um, reversal or mean reversion strategies, you'll instantly start to see that it helps filter your trades better, and it cuts out a lot of the garbage moves that you have. So if you're serious about trying to get maybe a better edge on your price action, trying to figure out when your entries, help you manage your risk so you don't enter into a potential losing trade or get out of a losing trade quicker, I would invite you to start watching Tick. It's one of those indicators that once you start using it, you'll see that it's pretty hard to not look at it when you're doing intraday. So let's kind of dive in, give you through an example. That was just a short overview of what it was. So let's go look at some examples here. Okay, up on the screen, I've got my tick chart. I put the comparison of SPX in the background just because I like to visually see what SPX is seeing and how it's moving. So this is from 5/21, so that was a couple days ago when we had the bond auction, and you can sort of see what was going on internally inside of the market with SPX. So beginning of the day, we actually started really negative, started to come up. You could see we started to lose the momentum from the beginning of the day, started to pull back. You can see we hit that tick reading down here, close to negative 1,000. And this actually went higher, and SPX went lower. And when this one made that lower low, you can see we started to move up here, shot up, shot up, shot up. Then we actually started to reach a resistance level in SPX, which I could show you, which we won't talk about, but we're focused on tick. You could see that we stayed flat here, and tick just kind of went back and forth, back and forth, back and forth. Then the bond auction happened, and you can see that we started to fade this push-up move, and that's when we started to hug down here the rest of the day. Where's the decline? So this would have given me an indication to not go long because we are holding down here. When you see this many readings in a row that are below at the negative 1,000 or even up here at the top, that is a strong trend. And as you can see, we were pulling down the whole time here, and then get some tick ups, and there's the reversal in SPY. You can see it. But then we pretty much held below the zero line on tick the rest of the day, and we pushed up, and then that faded, and it just kept going lower and lower. So on a day like that, you can see that, okay, market's not as actually strong as you would think here in this area. And now we pushed down, and then we held down, and then we stayed down the rest of the day because we did not have that good bond auction. So I hope that helps give you a visual of how you can use it, and you can see that SPX reflects what's actually going on in the market. Yeah, I just wanted to give you a quick little tip here, first video. So hope you have a good rest of your day. Hope you have a good week. Hope you go learn how to utilize tick a little bit better in your trading.